Hello everyone. Welcome to the Stock Minds web channel. TransMedics Group, NASDAQ, TMDX, has emerged as one of the most innovative medical technology companies of the past decade. Despite a volatile share price over the past year, the company's second quarter 2025 results highlight robust revenue growth, expanding profitability, and a strengthening balance sheet. For long-term investors seeking exposure to the fast-growing organ transplant market, TransMedics' latest numbers underscore why the stock deserves close attention. In this video, we will dive into TransMedics' recent earnings, stock performance and valuation, growth potential, and the risks investors should consider. About TransMedics. TransMedics was founded in 1998 in Andover, Massachusetts, by Dr. Waleed Hassanein, a heart transplant surgeon who envisioned a better way to preserve and transport donor organs. The company developed the Organ Care System, OCS, a portable platform that keeps donor hearts, lungs, and livers alive and functioning outside the human body. By maintaining organs in a near physiologic state rather than on ice, the OCS improves transplant outcomes and expands the pool of viable organs. TransMedics' financial performance. TransMedics delivered another outstanding quarter in Q2 2025, with revenue climbing 37.68% year-over-year to $157.37 million, up from $114.31 million in Q2 2024. Earnings per share, EPS, surged 162.48% to 92 cents, compared with 35 cents a year earlier, reflecting strong operating leverage. On a trailing 12-month TTM basis, revenue reached $531.29 million, a 48.09% increase from $358.76 million in the prior year, while TTM EPS jumped to $2.02 from just 9 cents, an extraordinary gain. Free cash flow also turned decisively positive, with TTM free cash flow per share of 46 cents, up 108.03% from a negative $5.73 a year ago. Profitability metrics underscore the company's improving fundamentals, with gross profit margin of 59.79%, net profit margin of 13.49%, and free cash flow margin of 3.27%, supported by a return on assets of 5.8% and a robust return on equity of 28.21%. While leverage remains moderate with a debt-to-equity ratio of 1.63. Over the past 5 years, TransMedics has been growing revenue at a staggering 96.2% CAGR. Net income started to turn positive in 2024, and free cash flow turned positive in 2025, which is a good sign. TransMedics' fiscal 2025 financial forecast. Looking ahead, analysts remain optimistic, forecasting 2025 revenue of $599.3 million, a 35.73% rise from 2024's $441.54 million, and projecting non-GAAP EPS of $2.25, a 122.35% increase from 2024's $1.01. Wall Street analyst maintains a buy rating, with an average price target of $138.88, offering about 21.22% upside, and the highest estimate of $170, implying potential upside of nearly 48.36%. TMDX, stock price performance and valuation. At the time this video was created, the stock was trading at $114.57 per share, reflecting a 23.1% decline over the past year, which significantly underperformed the S&P 500's 17.5% gain during the same period. However, the longer-term picture remains impressive. Over the past 5 years, the stock has soared 589.7%, far outpacing the S&P 500's 96.7% increase. From a valuation standpoint, TransMedics carries a price-to-sales PS ratio TTM of 7.26 and a forward PS ratio of 6.52, while its non-GAAP PE stands at 59.36 on a trailing 12-month basis and non-GAAP forward PE of 51.01. While the price-to-free cash flow ratio is 225.08, looks high but understandable, as TransMedics' free cash flow just started to turn positive this year. Based on Fiscal.ai data, if we look at the valuation since 2024, the forward PS and forward PE are below the average. While the forward PE is still relatively high, it remains below its historical average, and is reasonable given that TransMedics' EPS is still growing rapidly as the company has turned profitable. TransMedics' growth potential. TransMedics' growth potential remains strong, driven by several factors. 1. Next-generation technology platform expansion. TransMedics is poised to expand its market through next-generation organ care system (OCS) technology, which prolongs organ viability and improves transplant outcomes. In August 2025, the FDA granted conditional approval for the company's next-generation OCS Enhanced Heart trial, the largest heart preservation trial globally, targeting over 650 patients. This trial explores extended heart perfusion, potentially improving preservation duration from the current 4 to 6 hours to up to 24 hours, enhancing donor organ utilization. The technology extends beyond hearts, with lung trials set to begin in Q4 2025, driving clinical adoption through 2026. These advancements improve donor eligibility and operational efficiency at transplant centers worldwide. TransMedics' innovative platform and FDA approvals position it to significantly capture market share in the organ transplant sector by delivering superior preservation and better patient outcomes. 2. National OCS Program (NOP) Infrastructure Scaling. The National Organ Care System Program (NOP) is TransMedics' key competitive advantage and driver of growth, combining advanced organ preservation with an extensive logistics network. In Q2 2025, the company operated 21 aircraft covering 79% of NOP air transport missions, reflecting high operational efficiency directly boosting revenue. NOP includes 17 hubs across the U.S., staffed by nearly 300 clinical specialists, enabling access to donors within a 2-hour radius. Service revenue hit $61.3 million in Q2, up 43.9% year-over-year, fueled by expanding aviation and ground transportation, which now accounts for nearly 40% of missions. This vertical integration creates significant barriers for competitors while allowing scalable growth. The upcoming Q3 launch of the NOP Connect digital ecosystem aims to enhance transparency by acting as the Uber of organ transplant, further strengthening TransMedics' market position. 3. Organ segment diversification and market penetration. TransMedics showed strong growth across all organ segments in Q2 2025, with liver revenue at $116.1 million, up 50.7% year-over-year, heart revenue reaching $35.7 million with 13.4% growth, and lung revenue at $4.6 million. The liver segment leads due to strong market penetration and NOP-enabled operations, with 76% of liver transplants now happening during daytime hours. This multi-organ approach diversifies revenue streams and reduces reliance on any single segment, ensuring stability during seasonal fluctuations. Heart segment revenue also grew 19.6% quarter-over-quarter, reflecting accelerating adoption. TransMedics has supported over 9,000 transplants via NOP and aims for 10,000 U.S. NOP transplants by 2028, targeting between 20,000 to 30,000 by 2030. Improving organ utilization rates 20% lungs, 30% hearts, 65% livers provides huge upside since every 1% increase adds at least $10 million in revenue. Risks to consider. While TransMedics looks like a compelling stock, we should be mindful of potential risks. 1. Allegations of corporate misconduct. TransMedics faces serious allegations including kickbacks to transplant surgeons, anti-competitive tactics, fraudulent billing, and concealing safety risks tied to its OCS. Reports accuse the company of steering rejected organs to favored users and pushing unsafe organs while hiding adverse information. These claims have triggered intense legal and regulatory investigations, raising significant concerns about the legitimacy of TransMedics' business practices and investor disclosures. 2. Regulatory and legal investigations. TransMedics is under investigation by multiple regulatory bodies for potential securities law violations and fraudulent business practices. These investigations pose a risk of significant fines, penalties, and legal expenses that could negatively impact the company's financial health. The ongoing scrutiny may also harm investor confidence, reduce market value, and create operational challenges affecting future growth and stability for TransMedics. 3. Competitive and safety risks. The OCS faces safety and efficacy scrutiny, with reports claiming rejected organs were still used. This has led to concerns among transplant centers about the device's reliability and trustworthiness. Such issues could reduce adoption rates and cause a loss of market share to competitors. Additionally, FDA and medical experts have raised questions about potential organ damage and inconsistent survival benefits, adding to doubts about OCS clinical value. Conclusion: TransMedics Q2 2025 results highlight a company delivering exceptional growth and profitability while addressing a critical need in the organ transplant market. Revenue and earnings are accelerating, free cash flow has turned positive, and analysts project strong double-digit gains ahead. Although the stock has pulled back 23% in the past year and trades at premium multiples, its unique technology, expanding market opportunities, and long-term growth prospects justify the valuation, making TransMedics an attractive buy for investors seeking sustained medtech growth potential. But remember, this is not a financial advice. What do you think about TransMedics? Are you buying, holding, or passing? Drop your thoughts in the comments below. If you found this video helpful, please make sure to like, subscribe, and hit the bell so you don't miss my next stock analysis. Thanks for watching and see you in the next one.